I'm Suresh. I head Craft Interactive India operation. I'll come to the point now straight. I essentially intend to add and highlight the region-specific enhancement that has been built in the system on top of the standard build of ERP Next. Essentially for this region, everyone knows that VAT is, CET law is being implemented since June 2023. Corporate law, CET law is published in official gazette in October 2022, precisely on 10th October 2022. And the federal decree law has been passed in 9th December 2022. CET law lays a foundation for UAE to align with the global minimum tax initiative under OECD. OECD is Organization for Economic Cooperation and Development. This is technically called Pillar 2 of BEPS, that is Base Erosion and Profit Shifting Initiative project, discussed under G20 summit. This is what the brief of CET. I'm not taking completely on the CET details here. I'm just taking you through the standard features of CET and how we factored in the system. As I said, CET is effective from 1st of June 2023. The company which are following June to May financial year, they are already under the radar of tax for the last 6 months, and they have to submit their return by end of 2024. Those who follow calendar year is a financial year, they have 1 more month to wait, and they have essentially need to submit their VAT return by mid of 2025. So the CET regime now has given a slab system, which is basically tier system they have given with the 3 rates. The slab is like anything less than 375,000 taxable profit, which is 0 rate. And if it is more than 375, it is 9%. There is another slab is created, which is for multinational enterprises, which comes under the pillar of BEPS framework 2, which is nothing but any taxable profit, global consolidated profit, more than 750 million euro, different taxes applicable, different rate is applicable, which is as of now 15%. That is not given in the framework of CET law now, but it will be eventually released. CET has given some exemption for taxpayers, which is primarily for federal and local governments, and the company which are directly owned by government is also exempted. And the person and the company engaged in extractive business. Extractive business is nothing but natural resources exploration, oil refinery companies, and the logistics of oil refineries are also exempted from tax. There are few other criteria yet to be released by the authorities, so that I have not added over here. Free zone is always been encouraged by the government of UAE for encouraging the MSME, SME sectors. CET law also has given a privilege to the free zone companies. They are not exempted, by the way, but they are under 0 tax, provided they don't do business with mainland. Now on the computation, how do we do the computation? In the tax computation, there are few revenues are exempted and few expenses are deductible or disallowed. Revenues like profit and dividend distribution is exempted. You don't have to pay tax on that. Other income which we generally book in the P&L needs to be specified, however it is exempted. Foreign exchange or loss, this is also come out of the framework of CT. Then comes to expenses. Any expense in capex nature is disallowed. Expenditure incurred in related to exempted income is also disallowed. And there is a limitation they put on interest on business loan. Basically what happens is any business takes a loan for running the business. There is a slab they fixed 12 million, up to 12 million, and there is fully allowed. If the interest income is more than 12 million, 30% of EBITDA is allowed. 30% of EBITDA means, EBITDA is essentially means cash profit of the organization. There is a limit for entertainment expense. Entertainment expense 50% is only allowed. Penalties, fine, which is paid by the companies are not allowed. Donation, gift given to non-public benefits are also disallowed. And the other factors that the related party transaction, there's a group company, they have a lot of companies within the group. The transaction between the companies have some restriction in terms of its carry forward losses. Generally what happens, one organization will have a loss, another organization will have a profit. They offset with the consolidation. That also has some limitations in the CT law. These are the features which I explained on the broader picture of CT. Now we are saying that how we are factoring those things in our system. When you create a company in the system, you need to give the whole details in the master, wherein you have to select the country where the company is operating. The moment you give Emirates, Arab Emirates, United Arab Emirates, the options will pop up like whether it is CT is applicable or not. By default it is applicable. If it is not applicable for those companies which I mentioned earlier, you can untick, then it is business as usual. There is nothing to be done in the system. If it is CT applicable, automatically slab system will also pop up, wherein you can set this slabs what I mentioned, 375, less than 375, more than 375, and the other slab which was mentioned for multinational organization. This is the screen wherein you can set the slabs. I have only mentioned 2 slabs. You can add a number of slabs. As and when the system is become mature, you can add a number of slabs. Until the earlier screen, the 2 options which I mentioned earlier in terms of setting the slab, in terms of exemption of the companies will be taken care of. And this screen will talk about the expenses and revenue which I mentioned, that exempted income as well as deductible expenses. How we are organizing this in the system is that at the chart of account level, you can set the slab in the sense, for example, if the expense is disallowed, you can click the button disallow. This will be completely deducted while computation of tax. We have given an option CT value. This denotes basically for, you have an option to put a percentage on expense, where I explained for entertainment expense 50%, which I mentioned earlier. Here you can utilize that option. You can give a 50% while creating the chart of account of entertainment expense. Then while computation 50% of expense will be disallowed, 15% of expense will be allowed. We have another option that in case if you have to put an absolute value, for example, as I mentioned that interest expenses, there is a ceiling of 12 million. If there is anything more than 12 million, 30% of EBITDA is allowed. Where if you want to have an absolute value to be put, we can put in that option. So this chart of account level, almost every options of CT will be taken care of it. You can manage with the master and chart of account, the whole process so far released by the CT will be taken care by the system. After setting all this, you will get into your MIS report. MIS report will give you standard MIS, P&L, balance sheet, etc., what all you want to have it, you can create it. In the balance sheet P&L account, there is an option we are given on the right corner, computation table. When you click the MIS report, you will get the standard P&L report, and go to the computation table, you will get the real taxable liability of the organization. After adjusting your expense, income, deductible, non-deductible, like some that company, all will be taken care, and the taxable liability will be given in this sheet. This is, I have given This one. This is what about the thing. But now what has happened is the process of CT and the qualifying criteria yet to be released. They are still evolving. We will be making all those changes once the system is become matured. It is natural that generally what happens is any new system, any especially taxation system to a country where it doesn't exist, will have a lot of ambiguity at the initial stage. Over a period of time, it will be cleared off. This has happened in VAT case also when it is implemented in 2018. There are a lot of complexities, tax apportionment difficulties. People end up paying a lot of fines, and all these things are happening. Now, what we Craft Interactive intend to do is to create an as much as possible that automatic system in the system itself, wherein manual intervention has to be minimized. With this note, I am signing off. Thank you so much for your time. Thank you.